Hi, today we are going to have a look at the 2018 Leaving Cert Higher Level Question 1 Manufacturing question. As with all these question 1s, you're given a trial balance, and with the manufacturing account you were given some notes also, and then you're asked to prepare a manufacturing account, trading profit and loss account, and a balance sheet. So we're going to start off with the notes. Note 1 just tells us the closing stock on hand at the end of the year for finished goods, for raw materials and for work in progress. So there's no workings to do here. Note 2 is to do with sale or return. So it says the finished goods were sent to a customer at the end of the year on a sale or return basis. So the customer had the option to send these goods back if they wanted, so they shouldn't be included as a sale. They're recorded as a credit sale of 17,500, which is a markup in cost of 25%. So that sale price is 125% of the cost price. So to have a look at this note, first of all, we need to work out the cost price because we need the selling price for sales and debtors, and we need the cost price for closing stock. So the selling price was 17,500. So to get the cost price, if I got 17,500, divide by 125, multiply by 100, gives me a cost price of 14,000. So the sales from the trial balance I can see are 1.4 million. And I'm going to take away the sale or return, because that shouldn't be included, of 17,500, which leaves me with 1,382,500. And there's no more changes to sales throughout the question, so that's the figure that will go in the profit and loss account. The debtors from the trial balance is 62,000. And again, the sale or return shouldn't be included there because they don't owe us the money because we didn't actually sell it to them. So I'm going to take out the 17,500, which leaves me at 44,500. And there's more changes to debtors later, so I won't say where that goes in the accounts yet. It's only when we have the final figure that will show where in the accounts that it will go. And the last thing is a closing stock of finished goods per note 1, I can see is 68,100. And I'm going to add the sale or return because that would have been taken out of stock initially and it shouldn't have been. So I'm going to add back in the stock, and stock is valued at the lower of cost or net realizable value, which in this case is the cost, and it's usually the cost of 14,000. Gives me 82,100, and that closing stock of finished goods will go on cost of sales in the P&L, and it will be a current asset in the balance sheet. That's note 2 complete. Note 3 says the suspense figure arises as a result of a discount allowed 600 entered in the debtors account and a credit purchases of raw materials 6,000 entered in the incorrect side of the creditors account. So there's two different things going on here. We're going to look at them separately. The first thing is a discount allowed 600 entered only in the debtors account. Okay, so if we allow a discount to somebody, it's bad for the company, it's an expense. So what we should have done is we should have debited discount and we should have credited debtors. Now, what did happen? It says that the 600 was entered only in the debtors account. So it was entered in the debtors account, debtors is fine. It wasn't entered into the discount account, so I need to put it into discount account, and then the opposite will go into suspense account. So in red here, I just have the figures from the trial balance, or if there's any changes, the most up-to-date figures. So that's discount and general factory overheads are from the trial balance, and debtors is from note 1 because we've changed that already, just to show where these figures in red are coming from. The second part of the question then says that there's a purchase of raw materials 6,000 entered on the incorrect side of the creditors account. So if we purchase raw materials, we should debit purchases and credit creditors. So it was okay in the purchases, but in the creditors, it was put in the wrong side of the creditors account, the incorrect side of creditors. So instead of crediting creditors with 6,000, what we did was we debited creditors with 6,000. So here we should have debited purchases and credited creditors. So instead of crediting creditors with 6,000, we debited it with 6,000. So to fix that, we're going to have to credit it with 12,006 to correct the initial mistake and 6 to put in the proper figure. So for crediting creditors of 12,000, I'm just going to put the opposite in the suspense as a debit balance of 12,000. So whatever side it goes in these accounts, to fix it, and then we just put the opposite into suspense account. So to do up the notes then, the first note we need to do is a discount note. Now in the accounts, discount is a credit balance of 8,000, it's an income. Discount can be income or expense, depending on whether discount allowed or discount received is greater. So it's a discount of 8,000 credit balance. I've put in 600 of a debit balance, so that's going to reduce me credit balance to 7,400. I don't need to do a note on debtors because there was no change to debtors there. We're just showing it to show how the T accounts worked. There is a change to general factory overheads. So from the trial balance, general factory overheads are 91,400. I'm going to have to take away the discount error of 600 because it's on the opposite side of the T account. And I'm going to add the 12,000 because it will increase my debit balance. It's on the same side. So general factory overheads are now 102,800 and they will go in manufacturing overheads in the P&L. And the discount will go in operating income to P&L as that's the credit balance. I don't need to do any change to purchase of raw materials because it was entered correctly there. It was just showing the T account. Creditors, I do need to do a change to because there's an entry in creditors. So creditors from the trial balance I can see is 49,400. And again, because the 12,000 is on the credit side, it's going to increase that credit balance. And creditors are now 61,400. And that 61,400 will go in liabilities less than 1 year in the balance sheet. And that is note 3 on suspense complete. Note 4 is the bank reconciliation note. So it's saying the bank figure from the trial balance has been taken from the firm's records. So our figure for bank, here we say it's an overdraft of 43,600. A statement arrives at the end of the year showing an overdraft of 33,300 and there are the following discrepancies. Usually what happens here are the first two notes affect our figure, 43,600. The third one is usually an outstanding check which we wrote, so we know about it. It's included in our figure, but it's not included in the bank statement. So the first entry was a check for 1,000 lodged directly into the firm's account on behalf of a debtor in respect of a bad debt previously written off. This represents 40% of the original debt and he's going to pay the remainder in January 2018. Okay, so this is a bad debt that was previously written off, but now he's giving us the money again, some of the money, and he says he'll pay the remainder at the start of next year. So to have a look at this note, the first thing here is that we received €1,000. Okay, so we received €1,000. Now that 1,000 is 40%. So to see what the whole debt is, if I get my 1,000 divided by 40 multiplied by 100, the whole debt must have been 2,500, so we're still owed €1,500. So the amount we're owed, the €1,500, will be added on to debtors. Now I can see my debtors from note 2, I already have to change to debtors. So my most up-to-date debtors figure is 44,500, and I'm going to add the 1,500 bad debt that I'm still owed, which leaves me with debtors of 46,000, and that debtors figure will go as a current asset in the balance sheet. The bad debt recovered, I got €1,000, he's going to give me the other €1,500, so in total the bad debt recovered is going to be 2,500, and that 2,500 will go as operating income in the P&L. The 1,000 that I received will reduce my bank overdraft. So from the trial balance, as we saw already, the bank overdraft in the trial balance is 43,600. I received €1,000, so that's going to reduce my bank overdraft, which leaves me with 42,600. And that is part 1 of the bank rec done. Part 2 says rent due at the end of the year was paid directly into the firm's bank account. Okay, so we can see here from the trial balance that we received rent up to the end of September. So for the first 9 months, we received rent of 9,000, which means the rent would be €1,000 a month. So we were owed another 3 months rent, which would be 3,000. That was paid directly into the bank account without us knowing. So that has to be accounted for. So the 3,000 that we received, so again it's 9,000 for 9 months. So if I divide that by 9, it's 1,000 a month, and multiply that by 3 for 3 months gives me 3,000. That was received directly into the bank account. We didn't know about it, so that's going to reduce our bank overdraft by 3,000 to leave me with a bank overdraft of 39,600, which is going liabilities less than 1 year in the balance sheet. The rent was 9,000 in the trial balance. I received 9,000. I received a further 3,000 I wasn't aware of, which will increase my rental income to 12,000 for the year, and that goes in operating income in the P&L. Now we can do a little reconciliation here to make sure our bank figure is correct. If we go back to the question, it says that the bank overdraft as per the statement was 33,300. But they weren't aware of the outstanding check of 6,300. So that will leave us with a bank figure from the reconciliation of 39,600, which agrees to our bank figure, so we know we are correct. Note 5 says, provide for a recent wage increase of 5% to be backdated to cover the 3 months from the 1st of the 10th. Okay, well, direct factory wages are 200,000 for the year. So for 3 months, they would be 200,000 divided by 12 multiplied by 3, or a quarter of 200,000, which is 50,000. And the increase is 5%. So as I can see from direct factory wages from the trial balance were 200,000. That was for the year. So the increase was for 3 months, which would be 50,000 of that, and the actual rate of the increase is 5%. So 50,000 by 5% is 2,500, which leaves me with direct factory wages of 202,500. That is note 5 complete. Note 6 then says, during the year, during 2017, Austin Limited built an extension to the warehouse. The work was carried out by their own employees. The cost of their labour of 24,000, and that's before the wage increase, was included in factory wages. The materials costing 31,500 were taken from stock, and no entry has been made in the books. Okay, so the work that their own employees did has to come out of wages. The materials they use have to come out of purchases, and the two of them have to go into a fixed asset of buildings because they built an extension. So we can see here direct factory wages first of all. Now, just previously, just have a look at this before we move on. The 2,500 that is still owed, that will go as liabilities less than 1 year in the balance sheet. And the full amount, I haven't said where that went yet because we're going changing this here now. We'll see where it goes. So from the previous note, the direct factory wages were 202,500, and we have to take away the work performed by the employees. Now, the work performed by the employees, if they got an increase of 5% for the year, for the 4 months, the 5% wage increase was for 3 months. So if you spread that out over a year, if you get 5% divided by 12 multiplied by 3, it's 1.25%. So it will be just 24,000 by so 1.25% was the increase. So I multiply my 24,000 by 101.25% to include the 1.25% increase, and that figure is going to be taken away because we're going to take it out of direct factory wages and it will go into buildings. Now, the purchase of raw materials. The purchase of raw materials from the trial balance are 514,200, and I have to take away the materials used by the employees, and the materials used by the employees here were 31,500. And again, that's just going to be a minus, which gives me 482,700. And then factory buildings from the trial balance, we can see are 940,000. And if I add the direct factory wages here of the employees who did the work, and if I add the purchases of the raw materials that the employees used, that will give me factory buildings at the end of the year of 995,800. And that is that note complete. Note 7 is a common note here about where there's a sale of a van or a machine that was included in the sale of scrap material. And again, this comes up a lot in the manufacturing one. So the first thing we have to do, we want to see whether we made a profit or loss on the machine that we sold. And to do that, we have to get the depreciation on that machine. And we need to figure out how long we had that machine for. So if we got it on the 1st of the 4th, 2011, and we sold it on the 30th of 6th, 2017, then we had it for all of 2012, 13, 14, 15, 16, which would be 5 years. We had it for 9 months in the year we got it, and 6 months in the year we sold it, which would be 15 months, which would be a year and 5 months. So in total, we would have had it for 6 years and 3 months. So we'll need that when we work out the depreciation. Now the first thing we're going to have to do is take out that 3,000 out of the sale of scrap material, because it shouldn't be included in the sale of scrap material, because it was a sale of an asset. So the sale of scrap material from the trial balance is 5,100, and I'm going to take out the 3,000 sale of machinery that shouldn't be included there, which gives me 2,100 for the sale of scrap material, and that will go in a manufacturing account. I now have to work out the depreciation of the old machine. Well, the cost of the old machine was 20,000. The depreciation rate on machinery is 10%, and I had it for 6 full years, so I multiply it by 6, so that gives me 12,000. Now the 3 months, if it's 2,000 for a year, if I get 2,000, divide by 12, multiply by 3 is 500. So it's 500 for the 3 months, which gives me total depreciation of the old machine of 12,500. And it tells us in the question that the depreciation of plant and machinery is 10%. That's where the 10% is coming from. I now have to see whether I made a profit or loss in the old machine. So the cost of the old machine here, I can see was 20,000. The depreciation I'm after working out here to be 12,500. Gives me a net book value for the old machine of 7,500. It says that I got an allowance of, I received 3,000. So if I received 3,000 for it, so it was worth 7,500. I received 3,000, so I have made a loss of 4,500 because I received less than what it was worth by 4,500. The cost of plant and machinery from the trial balance. So I can see the cost of plant and machinery at the top of the trial balance is 420,000. And I just take away the cost of the machine that I sold, which was 20,000. Which leaves me with 400,000, and that will go as a fixed asset note in the balance sheet. Depreciation of plant and machinery for the year. So I can see here, plant and machinery is 420,000 at the start of the year, then I sold a machine, and then for the next 9 months it was 400,000. And I know it's 9 months because it was sold, it was sold, halfway through the year, so it'd actually be 6 months and 6 months. Yeah, 6 months and 6 months. So for the first 6 months is 420,000. The rate is 10%, and for 6 months by 6 over 12. And for the next 6 months, the cost is 400,000, and again the rate of depreciation is 10%, and again by 6 over 12 for 6 months. So that leaves me with a total for the year, total depreciation for the year of 41,000. I now need to work out the accumulated depreciation of plant and machinery. So from the trial balance, I can see, if I go up to plant and machinery, that the cost was 420 and it's now worth 255. So the difference must have been the depreciation. So 420 minus the 255 gives me the accumulated depreciation at the start of the year. Then I have to add this year's depreciation, which I'm after working out there to be 40,000. But I have to remember to take out the depreciation of the van that we sold, because we don't have that van anymore, so the depreciation has to come out. And the depreciation of that sold van was 12,500. So that will leave me with accumulated depreciation of plant and machinery in the balance sheet of 193,500. And that is note 7 done. Note 8. Note 8. Provide for depreciation as follows. The plant and machinery at a rate of 10% of cost, we've done that. Buildings at 2% of cost. depreciation on buildings is to be allocated 75% to factory, which will go in the manufacturing account, and the remainder, the other 25%, to office administration, which will go into P&L. Okay, so depreciation of buildings. So from note 6, there's a change to buildings, so I need to get the most up-to-date figure for buildings, which are now 995,800. And they are depreciated at 2%. So 995,800 by 2% gives me depreciation of buildings for the year of 19,916. Now that has to be split between factory and office administration. So the total is 19,916. 75% of that will go in factory overheads in the manufacturing account, and 25% of it will go as an admin expense in the P&L. And it was 75-25. I just want to check that. And sorry, because they should total, that should be 25, not 20. And that's right, because now they total 19,916, so it's divided out properly. I need to do a note on accumulated depreciation of buildings for the balance sheet, so I may as well do that now. And again, I can see from the trial balance that the cost was 940. At the start of the year, they were worth 900, so the depreciation must have been 40,000 up to the start of the year. And I'm going to have to add in this year's depreciation, which we've just worked out to be 19,916, which gives me total depreciation, it's like total accumulated depreciation of buildings of 59,916. And now for the last note, note 9 says we have to provide for investment income due and debenture interest due, and then we need to create a provision for bad debts, 6% of debtors. So we're creating a bad debt provision, so there is no bad debt provision already. So first of all, anyway, we need to look at the investment income. So for the investment income, if I look at my trial balance, if I go to my investments, there are 4% investments acquired on the 1st and the 3rd, and they're 330,000. So I only had them for 10 months, and they're worth 330,000, and the rate of interest is 4%. So 330,000 by 4% by 10 over 12, because I had them for 10 months, leaves me with 11,000. I take away any investment income that I received, so I have to go back to my trial balance and see did I receive any investment income, and I didn't. So all of that 11,000 is still due to us. So the full amount, the 11,000, will go as operating income to P&L, and also as a current asset in the balance sheet, because I haven't received any of it yet, so we're owed it at the end of the year. The debentures, I have to work out the debenture interest due. So again, if I go back to my balance sheet, there are 8% debentures. At the end of the year, there were 300,000, but that includes 50,000 issued on the 1st of the 4th. So for the first 3 months, there were 250,000. Then there was another 50,000 debentures issued to us, which brought up to 300,000 for the next 9 months. So for the first 2 months, there are 250,000 by 8% by 3 over 12. And then for the next 9 months, there are 300,000 by 8% by 9 over 12. So in total, the investment income for the year, the debenture interest for the year is 23,000, and that will go at the bottom of the P&L. And the debenture interest that's due, which is all of it, because we haven't paid any debenture interest from the trial balance. So all of that is still due. That 23,000 will go as a liability less than 1 year in the balance sheet. Now the bad debt provision note. I need to do a note on bad debt provisions. So to do that, I have to get my most recent debtors figure. So from note 4, I think the debtor is the last time that we changed debtors. So I need to go back up to look at that debtors figure. From note 4, debtors were 46,000. Now the bad debt provision is 6%. So I need to get 6% of 46,000 which is 2760. And that 2760 will go as a selling and distribution expense into P&L because it's all it's a new provision, it's not an increase or a decrease or anything, and it'll be taken away from debtors in the current asset note in the balance sheet. And that is our notes complete. Now we have to do the accounts. So to do the accounts, I'm going to start off with the manufacturing account. So if there's no changes to figures, they'll come directly from the trial balance. If there is a change, they will come from the notes. So to start off, an opening stock of raw materials will be from the trial balance because that should never change. So that should be 46,500. And that is directly from the trial balance. So opening stock of raw materials. Sorry, just make sure I have the correct figure. It's 41,500. So the opening stock of raw materials is 41,500, which is coming from the trial balance. To that, we're going to have to add the purchases of raw materials. So purchases of raw materials, I'm going to get from the notes because there was a couple of changes to purchases of raw materials. So purchases of raw materials should be 482,700. I'll add those, and I'm going to take away the closing stock of raw materials. And the closing stock of raw materials again will be coming directly from the question of 31,500. That's directly from the trial balance. There's no change to that, which will leave me cost of raw materials consumed of 492,700. Now I have to get my direct cost. So the factory wages, I split my factory wages. It was one of the last notes. So the direct factory wages 178,200. Here, sorry, note 6 is 178,200. Hire of special equipment, there was no change to that, so that's coming from the trial balance of 39,800. And royalty payments of 26,900 again are directly from the trial balance because there's no change to that in the notes. So my total direct costs come to 244,900, and if I add those to the cost of the raw materials consumed, give me prime cost of 737,600. I now have to add my factory overhead expenses. So the first one I'm going to have are general factory overheads. Now general factory overheads were in the suspense note. I think that's where suspense was included. So my general factory overheads are 102,800 coming from note 3, the suspense note. Depreciation of plant and machinery, I worked out in one of the last notes. Depreciation of plant and machinery for the year was 41,000. Depreciation of buildings, again, I worked out in a note, and that was split up 75-25. So 75% of it will go here as a factory overhead and manufacturing account. And the last thing I have is the loss on the sale of the machine, which I worked out here to be 4,500. And that 4,500 goes in factory overheads. So if I add up all of these factory overheads, they come to 163,237. I'm going to add that to my prime cost above. Leaves me with a factory cost of 900,837. I now need to add my work in progress at the first of the first, and I need to take away my work in progress at the 31st of the 12th. So the work in progress at the first is just coming directly from the trial balance. So that is 38,200. And I'm going to take away my work in progress at the end of the year, which is coming from note 1 of 40,200. There was no change to that in the notes. And now so my expense so far is 898,837, and I'm going to have to take away the sale of scrap material because that will reduce it. So if I go back to my notes, there was a note on sale of scrap material. So the correct figure of sale of scrap material is 2,100. So if I take that away, it'll leave me with a cost of manufacture of 896,737, and that is the manufacturing account complete. P&L. So to start off with, my P&L always start off with sales, and there was a change to sales in the very first note that we did. So my sales is 1,382,500. Less cost of sales. Opening stock of finished goods will be directly from the trial balance. That should never change. So it should be 43,100. Add the cost of manufacture, which is the final figure for my manufacturing account. Gives me 939,837. And then I'm going to take away closing stock of finished goods. Now there was a change to closing stock of finished goods here in note 2 also. It was 82,100. So if I take that away, it'll leave me with cost of sales of 857,737. And if I say my sales minus my cost of sales, will leave me with a gross profit of 524,763. Now I just have to take away my expenses. My first expense is just administration expenses, and I think that's coming directly from the P&L, 59,200. There's no change to that. And my depreciation of buildings. Remember, we split it 75-25, so the 25% goes into admin expenses of 4,979. So that will leave me with total admin expenses of 64,179. Selling and distribution expense, the last thing we worked out was the bad debt provision, so that will go in here. It's a selling and distribution expense of 2,760. And we also had selling expenses which are coming directly from the trial balance. There's no change to those of 45,000. So my total selling and distribution is 47,760, which will leave me, if I add my admin and my selling and distribution, total expenses of 111,939. So my gross profit less my expenses leaves me with 412,824. Now I'm going to add any operating income. So there was a discount and there was a note on discount in suspense. We changed the discount figure to suspense note, which was note 3. So my discount is now 7,400. The bad debt recovered, there was a note on bad debt recovered. It was in the bank rec, the 2,500 that we received as a bad debt recovered. And then the rent. There is a rent note also because there was 3 months that we didn't know about that we got. So the final rent figure for the year, the correct figure of 12,000 will go in here. So now my total operating income comes to 21,900. And then if I add that to my profit above, leaves me with an operating profit of 434,724. I now have to add my investment income, which I worked out in the last note. My investment income for the year was 11,000. I'm going to add that on. And I have to take away my debenture interest, which again I worked out in the last note. My debenture interest for the year was 23,000. And that will leave me, when I take away the 23,000, that will leave me with a net profit of 422,724. Then I have to take away the dividends paid, and the dividends paid is coming directly from the trial balance. There's no change to that, which is 27,500, leaving me with a retained profit for the year of 395,224. And I add that to my profit and loss balance at the start of the year, which I can see from my trial balance. If I look down through my trial balance, the profit and loss balance at the start of the year is 38,000. And again, yeah, that's the third figure in the trial balance, 38,000. Leaving me with a profit and loss balance at the end of the year of 433,224. And that is the profit and loss completed. And finally, for the balance sheet, the first thing we always start off with the balance sheet are fixed assets. So the first fixed asset we have are factory buildings. Now there's a couple of changes to factory buildings. So if I go down and I look back through my notes to see the most up-to-date figure for factory buildings, I can see 995,800. The accumulated depreciation of buildings I also worked out in the notes. So the accumulated depreciation of buildings are 59,916. So the cost minus the depreciation leaves with a net book value of 935,884. Plant and machinery, again there is a change to plant and machinery when we sold the machine. So if I go back to that note here for plant and machinery, the cost of plant and machinery is 400,000. I also worked out the accumulated depreciation of plant and machinery in that note, and that came to 193,500 accumulated depreciation of plant and machinery. So I take those away, leave me with a net book value of 206,500. And now I'm going to add these down. I can put double lines under the first two columns because I'm not using these figures again. And my total net book value for fixed assets is 1142834. I also had financial assets, which were just my investments, and I can see from the trial balance my investments were 330,000, which will leave me with total fixed assets of 1472384. I now have to work on my current assets. So my current assets, first of all, I'll always put in my closing stocks, and there's three different types of closing stocks. Raw materials from note 1 in the question. Some of these may have changed, so we just have to be careful that they haven't changed. So raw materials has not changed. It's 31,500 from note 1. Work in progress has not changed, so that is still 40,200, the same as note 1 of the question. Closing stocks of finished goods has changed. So if I go back to my notes again, and as one of the first note, closing stock of finished goods is 82,100. So if I add up all my closing stocks, it gives me 153,800. My debtors, from the question, debtors was changed in one of the notes. Also, I think it was changed a couple of times, so I have to get the most recent debtors one, is 46,000. And I'm going to take away provision, which I worked out in the last note, of 2760, which will leave me with a debtors amount of 43,240. And I'm also owed investment income, and I worked out that investment income due here at 11,000 because I haven't received any of it, so it's all still due to me. So in total, my current assets come to 208,040. My creditors amounts falling due within 1 year. Well, the first thing I have here are creditors, and there's a changed creditors, so I need to get the most up-to-date creditors figure. And here in note 3, I can see my creditors were 61,400. My bank overdraft I will get from my bank reconciliation note. I can see here my bank overdraft is 39,600. Wages due was the wage increase of 5% of 2,500, 5% of the 50,000. That's liability less than 1 year because we haven't paid it yet. PAYE, PRSI, USC is coming directly from the trial balance of 20,700. There's no change to that. And the debenture interest due, I worked out in the last note. Debenture interest due is 23,000 because none of that has been paid, so it's all still due, 23,000. So to work out my creditors amounts due within 1 year, I total all of these, will leave me with 147,200, and then my current assets minus my liabilities within 1 year will leave me with a working capital of 60,840, and if I add that to my total fixed assets above, gives me 1533224. Now to finish off the balance sheet, the first thing I'm going to have is my finance by creditors due after 1 year, which is just my debentures, and that's coming directly from the trial balance of 300,000. Capital and reserves, I can see from the trial balance that my authorised share capital, so from the very top of the question, I can see that the authorised share capital is 600,000 ordinary shares and 300,000 preference shares. That's from the very top of the question. Then from the trial balance, I can see that the issued share capital is 550,000 ordinary shares and the preference shares are 250,000. Now I total this down and I can put a double line underneath because I don't use those figures. And I total my issued share capital, which gives me 800,000. And to that, I have to add my profit and loss balance, which is the final figure from my P&L of 433,224. So that leaves me with 1,233,224, and then I'm going to add that to my creditors amounts due greater than 1 year above. It gives me 1,533,224, and my balance sheet is balanced. I hope this helped you, and if you want to look at some further questions, please subscribe to my YouTube channel. Thank you.